Well, today we got our weekly export sales numbers. In case you missed them, let's run through them once again. And on the corn, a very big number, actually. We had over 1 million tons, 1.265 actually. And we had soybeans coming in at 1.041 million tons, and soy meal, 369,600 tons. Those were all pretty good. Soy oil, 38,500 tons. And the wheat was, I guess, okay at 333,200 tons there. Also, on the grain, sorghum, and cotton and rice, we had another pretty big number on cotton, 301,700 running bales. Remember, last week it was over 500,000. Grain, sorghum, only 2,400 tons this week, and the rice, 73,400 tons. We had some overnight export sales, and they all went to Mexico. We had soybeans, 261,264 tons to Mexico, and corn, 314,256 tons, all going to Mexico, so a very active overnight trade. Well, let's take a look at our current market action on the corn. Did these sales really help the cause any? So far, no, but we are coming off our earlier lows. December corn down 1 3/4 at 530.5 per bushel. In the soybean trade, with our quotes from bar chart, we have November down 1/2 cent at 1241.5. Now, a little bit ago, we checked it and it was down 7, so it is coming back. Now, on the wheat in Chicago, you have that December contract quoted at 742.25. We're still down 3 3/4 cents on the day. In Kansas City, December is down 2.5 at 742.5. Minneapolis spring wheat has December now up 3.5 cents at 942.5. So that's bucking the trend and going higher against everything else. Cotton is down 119 points on December at 109.87 per pound. Ted Seifried joins us now. He's with Zaner Ag Hedge. He's located in Chicago. Another one of those kind of blah days in much of the grain trade here, Ted. What do you see happening, and what does it tell you?
Yeah, I gotta say, I'm pretty impressed that we're not under a fairly significant amount of pressure right now. Uh, and going back to yesterday, even, I mean, with energies being under a ton of pressure yesterday, eggs held up fairly well, grains held up fairly well. Yeah, we were down, but you felt they had the chance to really put a lot of pressure, especially on soybeans yesterday, and they didn't do it. We're still operating from that big reversal higher after making new recent lows, closing above the previous day's high that we had. I guess that would have been on Tuesday, and then we held it yesterday, and today look at the soybeans trying to go back on to unchanged. Now we are seeing some sales. I'm still going to say that they're not big enough to really get excited about yet. We need these sales right now, but at least they're starting to come around. And the sales that we saw across the wire this morning from Mexico for both corn and soybean kind of tells us that global end users are starting to look at some value here, kind of thinking maybe these harvest lows are getting close to being in. Cash pressure should start to subside a little bit. Although for soybeans, we've kind of seen maybe a little bit more cash pressure than I was expecting. And that's probably because we're getting a lot of really good reports on yields. Guys really impressed with what they're getting, better than expected, having those extra bushels to sell. So we're working through this time frame. We're at this time on the calendar where we generally put in seasonal lows. And we're trying to balance that with what's going on in outside markets, specifically what's going on in energies and what's going on with the US dollar. And also sort of this new kind of climate that we're in now after that report from last Friday for the soybeans, with old crop stocks being much higher than expected, last year's production being 80 million bushels higher. And we're grappling with what this year's production might be and what our balance sheet will look like for this marketing year. We're going to get an update on that, by the way, Marlon, from the USDA next week. We're all putting in our estimates for that. I've got some growing estimates for this year's carryover in soybeans. But keep in mind, this time last year, we were looking at a rather large carryover for soybeans as well, and that shrank very quickly when China started to buy aggressively. So that's certainly a possibility again this year. We really have to see what happens. All eyes on China now.
All right, we'll come back and we'll take a look at cattle and hogs when we return right after this. This morning we had beef and pork export sales as well as grains, and let's see what the numbers were this past week. Well, on the beef, we had a grand total of 16,100 tons, and the pork, 22,100 tons. Wanted to also take a look at the livestock summary from yesterday to see if we had any cash cattle trade, and we did. It looks like in Kansas, we had fairly active trade, over 9,000 head between 123 and 124. And it looks like in Texas, we had over 6,000 head that brought 123 to 124 and a quarter. On a dress basis in Nebraska, and 193 to 196 would catch it. And it looks like the same price range in Iowa yesterday as well. Nebraska sold over 13,000 head yesterday, so don't see anything this morning. Looks like maybe we're done in that regard. Cash live hogs across the country were down $2.30 yesterday. Carcass basis hogs were down $1.25. On the futures trade right now, let's go to the live cattle and see if we're maintaining any gains or not. We are. December up $1.32 at 129.55 so far today. That's leading the pack. In the feeders, we have November up $1.72 now at 159.85. The nearbys are still showing the most strength here, so bull spreading apparent. Lean hogs, narrowly mixed. December down 20 cents at 81.52. Let's go back to Ted Seifried here quickly and find out what's going on. Live cattle and feeder cattle really showing signs of strength all of a sudden. What's behind that?
Yeah, no, good. I mean, feeder cattle last couple of days have really kind of picked it up. And that's without any major downdraft in corn. Yeah, we've been down a little bit, but not anything big. So that looks good. And the chart looks like it wants to try to break out to the upside. And you got to feel good about a cattle rally when the feeders are the leaders. I'm not a big fan of cliches, but that's one I kind of like. So I like what we're seeing there. But cash trading steady. I guess that's not a negative necessarily. But wow, you'd really like to see that cash trade advance and move higher. And this is the struggle that we've kind of had since the start of the calendar year, or even going back into last year. We just can't get that cash to rally, even when we feel like there's bullish fundamentals. It's a frustrating thing. Now, I do think there's upside potential for the cattle. I think there's good domestic demand. We're going to extend maybe this grilling season a little bit longer with the above normal temperatures that we have for the month of October, and that'll bring us closer to that holiday time frame. So I want to be bullish cattle, but I want to see that cash trade higher as well. As far as the hogs are concerned, I'm a little disappointed by export sales this morning, but overall they've been good for the past few weeks. I still think domestic demand is good. Cash trade lower isn't great, but I still think there's more upside potential in the hogs. And I think what we just saw was a correction. I'm looking for hogs to go higher.
Okay. All right. Well, thank you, Ted. Appreciate that very much. Ted Seifried of Zaner Ag Hedge with us, direct from Chicago. Janet, back to you.